The APR in aggressive mode for a target price of $29,000 is 437%. Dual investment. It's one of the best strategies you can use in a sideways market, but determining if it's going to be a sideways market is the hard part. Now with dual investment, it's kind of like crypto options. You are betting on two different things and you are earning interest on the difference. There is some risk. We're going to cover that a little later in this video, and I'm going to show you how everything works. But this is not financial advice. This is just a financial product that you can use to trade cryptocurrency with limited risk. So all of that covered in this video, and best of all, you will be getting your full value with Pionex. They are the sponsor of today's video because they are giving you free cryptocurrency for using their dual investment product. And that's just for signing up with a referral code, passing KYC, and using the dual investment bot. You don't have to deposit any funds. This is pretty generous. I haven't really seen this anywhere else where you don't have to deposit anything. You just sign up, you use the product, you get rewarded. And most importantly, if you already have a Pionex.com account, you can already use the dual investment product. If you are a new customer, KYC is required on Pionex.com. US residents can't use that. US residents have to use Pionex US, and dual investment isn't available there. What is dual investment and how profitable is it? It's called dual investment because you are investing in two assets at the same time. Let's say you sign up for a Bitcoin USDT dual investment contract. Those are your two investments, Bitcoin and USDT. There are a lot of different contracts available by cryptocurrency and by duration, all with different interest rates. The interest rate represents how much you will be earning. It's easy to look at it and go directly with the highest interest rate, but of course that comes with the highest risk. Basically, if you want to consistently stack and be profitable, you would pick contracts that give you a higher chance of earning more and more USDT. So this is kind of a USDT play, stable coins and stacking. Otherwise, if you think crypto is going to dip and you just want to be bullish long term while still having the opportunity to buy at a lower price, then that's when you stack the cryptocurrency. So more on that later. Because with dual investment, you'll always end up with either more stable coins or cryptocurrency compared to just buying in at the market price. And I know that sounds confusing, which is why we're just going to walk through all of that and look at some examples and pictures, because that makes it a lot easier. So this is a BTC to USDT dual investment contract, and it expires today. The APR is an outstanding 241% with the strike price of Bitcoin at $28,000. I bought the contract at 10:06 a.m., expiring at 4 p.m., about 6 hours later, with the minimum investment required to participate of 100 USDT. We'll get into the risks in a moment, but here's what's happening. If the contract settles at 4 p.m. with Bitcoin at a market price of $28,000 or greater, my $100 will now be $100.16. I know, 16 cents? That's not a lot of money, but it's pretty good considering that this was $100 for 8 hours and we are looking at the interest earned. If the contract closed with Bitcoin below $28,000, I would have received this much Bitcoin. Now that is pretty good considering that I am buying Bitcoin at a strike price of $28,000 rather than a market buy which would have let me buy Bitcoin at $29,000. So technically I am buying in at a lower rate. Awesome. So even if Bitcoin falls, I just bought in at a better price than a regular market buy. Ideally, you would be most profitable using dual investment in a sideways market, but let's talk about the risks. Because if the price goes up significantly or down significantly, you miss out on the additional market gains, or you might be buying in a little too high, or there's a lot of different things that could happen. So let's run through it. Let's say Bitcoin pumps 10% and you end up with more USDT. What you earn from dual investment is just interest. So if Bitcoin goes up 10% or 20%, you still get the same amount of interest stated in the contract. And that leaves you with USDT completely missing the market pump of the cryptocurrency you were investing in. But on the other side of things, if Bitcoin drops in price, you get Bitcoin at a discounted rate. And if, for example, the contract price was $28,000, Bitcoin drops to $22,000, you still ended up buying Bitcoin at $28,000. So that's the risk. Yeah, the market price was 29, the strike price was 28, but the contract settled at 22. You still bought up here at 28. So that's kind of where the risk is, but it is still better than buying up here at the market rate before the dump. So there are risks involved, whether the price goes up or down. Ideally, the situation you want to be in is in a sideways market, or if you just want to stack USDT, you can do that by bidding very low and going for those low interest rate contracts that have a very low strike price. And yeah, you just keep stacking that interest rate. I mean, the interest rates can be as low as 2, 3, 5%, while on the higher risk side could be hundreds of percentages for those short-term volatility plays. Important note, once you set up a dual investment, your funds get locked into that contract until it expires. So you can't sell or close that contract early. Your money, your funds are just locked in there until the expiration date. So if you sign up for one of those 1-year contracts, your money's gonna be in there for a full year. And at the end of that contract, your funds aren't automatically returned to your account. You have to claim it. So there are some steps involved, but I'm gonna walk you through this, and Pionex is incentivizing you to participate by giving you free trial funds where you keep the interest. We'll get into that promotion a little later in this video, but for now, we're gonna sign up for a dual investment contract. If you haven't signed up for Pionex, you would be eligible for this new user bonus that doesn't require any deposit on your side. You just have to complete KYC. If you are a US resident, you are ineligible. This isn't available to US residents. For everyone else, good for you. I'm a US citizen, but not a US resident. So I fall in that very lucky niche of being able to play on both the US and international platforms. Okay, here we are in the Pionex app. I prefer using it over the website just because it's a lot cleaner and simpler to use. I recommend using it if the website looks too overwhelming. So I am signed in here, and I do have USDT in my account because you're gonna have a lot more options for dual investment products. So from the homepage, we're gonna select Earn, and then you can see I am in the structured section. This is statistics, look for structured, and then we're gonna hit plus invest. So select dual investment, and now we have our options here. We can invest using USDT, that's against Bitcoin, Ethereum, and if we scroll further down, we're gonna see other options like against XRP, Solana, Cardano, BNB, and a couple more. So for now, we are going to set something up against Bitcoin, and you can see that we have options for 1 day, 2 days if we scroll to the right, and then others. Others will show us about a week to almost a year out at 316 days. You can see the interest rate drops when it's 316 days out, just because there's less interest and less opportunity out there. It's basically, with the interest rate of 5%, it's saying, hey, the chances of that happening are low, but if it does, you're either going to get 5% on your USDT, or you're going to end up buying Bitcoin at $15,000. Hopefully, Bitcoin does not go that low. I am bullish long term, but we'll see what happens. I don't make any guarantees or financial advice because I want you to be educated and come up with your own decisions, not just take things from people on the internet. So here we are at the 1 day settlement page, and this is what the settlement calculator looks like. It's using an example of 10,000 USDT, and it's showing what's going to happen if the contract ends above or below the strike price. So right now, the current market price of Bitcoin is $29,083. At 4 p.m., if Bitcoin is at $28,000 or above, you are going to get $10,032. That is a $32 profit for the day, but the APR, if you kind of calculate it, probably going to be 122%. And if Bitcoin falls below $28,000, essentially your $10,000 investment is buying Bitcoin at that $28,000 strike price, and you end up with Bitcoin for the exact amount it's going to tell you down here. And this is for that $10,000 example. So let's just jump into one. It really doesn't matter. And you can kind of see that there are different rates here. The APR in aggressive mode for a target price of $29,000 is 437%. Basically, you make more, but if that target price isn't met, you're gonna end up with some Bitcoin, which is good, but at the same time, dual investment is great sideways, and it's like a pretty good way to stack more and more USDT, because that's where you're earning all that interest. So for this example, we can play it safe. We're gonna go with the 50% APR option with a target price of $27,000. You see the details here. It kind of shows you the APR, my potential profit, and the delivery date. For me at the moment, it's gonna be about a day away. So I'm gonna hit purchase, and the minimum to invest is 100 USDT. And then it shows me the settlement calculator again. If Bitcoin is at or above $27, I'm gonna make 13 cents. If it's below that, I am buying Bitcoin at that strike price of 27,000. Now, considering that Bitcoin is at $29,000 right now, and if it falls below that, I'm buying Bitcoin at 27, and let's say Bitcoin hits a market price of 22, I'm still getting a price better than a market buy right now since it's above 27. And now we proceed by hitting continue, and we hit the confirmation page, continue again, and now our dual investment has been set up. You can see there is no off button because, yeah, there's no takebacks. We can't get our money out until the contract expires, so there's no undo. But if the contract does complete, like it does in this example, all we have to do is hit take profit, and then those funds are returned to our account. I made 16 cents, and that was from the example I showed you earlier, and that's how you use dual investments. I hope that makes sense. How to get free money from Pionex for using dual investment. So these are the steps. Number one, you have to sign up for Pionex using a referral code. Mine is available in the description, but let's say you sign up and want to share it with your friends. You also get more trial funds. So if you use my link, you get 12,888. Weird number, but that's what you get. And those are the trial funds. You use that, you earn interest, you keep that interest. Your friend signs up, they also get 12,888 in trial funds, and you get another 12,888 in trial funds. And walking through all those steps again, you have to sign up with a referral code, you have to pass KYC level 2, you have to sign up for a dual investment contract. And that's all you have to do. You don't have to deposit any cryptocurrency, any other funds. You straight up get that interest if the contract settles above your strike price. So we're gonna walk through that too. You know what they say, same shirt, different day. All right, now that you've signed up with the referral code and you've passed advanced identity verification, you have some trial funds to use. So from the homepage of the app, we're gonna select Earn, and then scroll over to Structured, and then select plus invest at the bottom right, and then you hit invite and get 12,888 trial fund at the bottom. Then we select check the sharing history, then at the top select use, and it shows us the available products, either 1 day or 2 days, and then the options available. So we can go with a target price of 28 or 27. I'm gonna select 27 because that's a little bit safer. You can see the settlement calculator. It shows you what you're kind of in for if you sign up and the interest rate you'll get. But I want a little bit more risk, so I'm gonna sign up for the higher interest rate product since it is trial funds, and I wanna have a little bit more risk. But remember, you don't earn any interest if these trial funds settle below the strike price. So you wanna make sure the price is above, but the closer you get to it, the more you earn in interest. So, you know, risk reward. So signing up, incredibly easy. Just follow those steps. Very similar to what we went over earlier. And when it does settle, you end up with some interest. You can use the trial funds a little bit more conservatively. I chose not to do that, but it's up to you. And remember, if you earn interest, you get to keep that. And that is the bonus with Pionex for using their dual investment product without having to deposit any cash. So I thought that was pretty generous. They are a sponsor of this channel. If you want to learn more about Pionex trading bots and their other products, check out this awesome playlist that I made here. And if this video has been helpful, as always, I appreciate the hitting. And if this video has been helpful, I appreciate it. And if you want to learn more about Pionex trading bots, check out this cool playlist here, which covers a lot of the different products they have available. There is a referral link in the description if you want to get started, 20% off your trading fees, as well as those free trial funds. And if this video has been helpful, feel free to hit that like button, check out the Discord, follow me on Twitter, and with that, I hope you got your full value for today.